There's one trap you must avoid in this market, and as long as you don't fall for this trap, the market has been a gift to trade. The momentum names have been on a tear, the trend remains firmly up across the board, and it would be an absolutely foolish mistake to fall for the trap of trying to front-run the turn, aka call the top. Let the market decide and trade in accordance to it. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan to determine if this indeed starts to look like a top. I'll give you a hint, there's some cracks forming, but it's not all that bad. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description and stay tuned until the end of today's show. I've got 8 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off today with a closer look at the SPY daily timescale. And the first thing we should evaluate is the trend. Now, of course, this is a brand new all-time high into today's close, but by a very slim margin. Nonetheless, it's the highest high in the daily trend count, and we know that this is a soft higher low from the Tuesday pullback. The reason it's soft is because the hourly trend never flipped to down. For a firm higher low on the daily timescale, you need the hourly trend to flip to down. So as of right now, if we were to take out this low, I still wouldn't be concerned about the daily trend flipping to down. My concern would be that we would start to violate the daily 20 SMA, which would then make it a little bit harder to maintain a firm higher low at the next structurally relevant level, which is still 660.40. Right? We talked about this level in the Saturday update video, and it's still relevant. If the hourly trend flips to down via some sort of reversal that looks like this, I would still maintain the stance that the daily trend can remain up via a low and a higher low happening at 660.40. Now, of course, there are threats and there are complications of that because once again, we would be underneath at that point the daily 20 SMA. A simple complication might look something like this. You then set some sort of lower high happening here on the retest of the soft higher low. That would be at 667.25. But we go through this exercise all the time. Let's pause for a second and let's think about the chart in front of us. We were just able to conjure up this full-blown reversal scenario in our heads very quickly, very easily, no problem. It's easy to envision how downside would come in here. But what is the base case of the chart in front of us? We just produced a brand new all-time high. We're just starting to break out of a multi-day balance range. Oops, I cut off the Thursday session from last week. It's a 5-day balance range that's starting to break out. So I would think that the base case rather favors either just straight up continuation via a Brigade bolt over today's high, continuation that looks like this, a shallow higher low pullback on the hourly chart that looks like this is a base case for continuation. The only time that I would start to change my tone and say, okay, this is starting to look a little bit more like a top is if the hourly trend flips to down like we just illustrated like this, we come into the daily higher low and we set a lower high. Once again, this is a complete figment of our imaginations as of right now. This is not even close to being the indication of what's on the screen currently, and this is the trap that you have to avoid as mentioned in the intro. The daily trend is up, and a great example of this is running the live stream in the morning, right? You hear all the time, okay, look, it's time for the market to go lower. We came in aggressively right down into this right yesterday, and oh my God, it's a bearish engulfer, and it's just going to be so bad. We closed underneath Monday's low. It's the end of the world. And while there is definitely a threat that consolidation here would put pressure on this level, what is the base case in an uptrend? It's that higher lows hold. It's that previous resistance turns to newfound support. So until we're actually underneath 667.25, I don't think it's worth having any sort of major bearish stance on this market. Now, we can take it down to the hourly timescale here, and I think this is an important consideration and really concession to make about the strength of this market. If the market tomorrow were to sort of give us a look above and failure back into the range, can you take the short from point A to point B and have it be reasonable? I would think the answer there is yes. Of course, that is a reasonable short on a failure to go higher back inside of the balance range here. But the difference is at point B, I would not overstay my welcome on the short side, and instead, I would really focus on the opportunity for an hourly higher low from here to here to preserve the trend. At that point, you would be pulling back from the highest high in the hourly trend count, right? Which is beautiful. Now, there's a couple of other nuances here to talk about as well on the hourly timescale that help us develop more of a bullish stance on the market, or rightfully so, an unbiased view of what's happening with price action. If we're thinking about how today actually unfolded, notice that the opening drive to the downside had the opportunity to remain underneath this pivot high from now last week. That's at 670.50. If the bears were really going to show up during today's session, if this consolidation was going to remain true for some kind of bear flag consolidation and a breakdown, you would think that the opening drive simply needed to find a lower high under 670.50, rotate here, and now all of a sudden this is a much more reasonable threat. But once again, what's the reality of the price action in front of us here? Can we just read the chart for what it's worth? The survey says that we're certainly getting consolidation into the end of day over the top end of the relevant hourly level. That's at 672.50, and therefore the base case should be, as long as we're over 672.50, we look for upside. It's that simple. Now, there could be some complications with an overnight high that could act as resistance or something of the sorts, and we'll deal with that as we come into the market open tomorrow via the pre-market prep at 8 o'clock here on the channel. But for now, if we're taking that hourly approach, this starts to look like a breakout of balance, successful with afternoon consolidation above. Why would I say successful? It's for the same reason that the sellers failed here. You can see in the lower wick of the second to last hourly candle, there was an attempt, we'll zoom in a little bit further back on that, sorry for the funky zoom. There was an attempt after setting a very incremental higher high to come back down underneath 672.50. Now we're getting extremely microscopic with the price action, right? But there's an attempt here to get back below the key level. All sellers needed to do was cause a close back down here, and we might be having a different conversation about remaining very neutral and balanced inside of the range after a failure to go higher here. But that's not what we got, right? Instead, where the buyers close it, back over the top end of the range. So the base case right now, as mentioned on the daily timescale, is either just straight up continuation Brigade bolt outside of prior day's range. We could see some sort of look above and fail, which would produce an hourly short from, again, A to B. That's fine. At point B, 670.50. Looking for the hourly high or low, and I would absolutely be bullish again on A if this were to take place. If this is an hourly high or low, and we can spot a 5 or a 2 minute higher low Brigade bolt pattern here over to 672.50s, absolutely target all-time high and then blue sky territories beyond that, right? So that is really my take on the S&P 500 here. If we were to get a major look above and fail, and then something that looks like this here, I would definitively change my tone to being neutral. Hourly trend is neutral if that's the case here, right? And then hourly trend flips to down when this last low set is taken out, as we mentioned on the daily timescale. So we won't belabor the point about conjuring up this vision of a massive reversal. If it happens, then so be it. It will happen. But just keep in mind, I will personally not be bearish until there's a firm break underneath 667.25. Let's take a look at some supporting evidence categories here. Let's come in with a Fibonacci from, in particular, this low, the major daily higher low. Got to do a little bit of chart adjustment. Thanks for bearing with me. No pun intended. Let's come in here with the fib from the bottom. Is that how you know you're getting old, when you make silly jokes like that? Keep in mind that all of this consolidation, and this is not a new fib. You could technically pull the fib to this high back here, and it wouldn't change the fib 38.2. But all of this consolidation, the 2 days of Thursday, Friday last week, and everything that we've had so far this week, all of it's taking place over a fib 38.2, classifying this, in my view, as bullish consolidation until proven otherwise. Let's take that fib off, and let's come in here with, instead, the anchored view apps on the intraday. And what you'll notice is that we're above the entirety of the stack. As and if we continue to move higher, this stack will move in and provide super support at 667.25. The all-time high anchored view app is great support for that hourly high or low right now at 670.50. I just don't see an overwhelming body of evidence here that points to, oh my God, call the top, the market's going to crumble, it's going to crash and burn, it's going to zero. It's a foolish mistake to have that approach right now, given what's happening in the current circumstance of not only the trend in the S&P 500, but all of the momentum names that are just on an absolute tear, as said in the intro, in the upward direction, right? So that's the S&P. Let's jump into the market internals. If you're not familiar with the internals, check out the video tutorial in the top right-hand corner. And PSA, public service announcement, if you do have access to the index score, and if this week you're like, oh man, it's broken on the 15-minute chart, what's up with that? Thinkorswim pushed an update. They broke whatever it is. I think it has to do with the dollar index on the 15-minute time scale. If you go back to your Trade Brigade account website account, go to My Downloads. If you re-download the index score, it is now fixed for the 15-minute time scale. So re-download that if you haven't done so already. But getting into the internals and what they look like currently as we push into new record highs, I mean, think about this. On the Tuesday breakdown, if sellers were really going to make a stand, they should have followed through on today's Wednesday session, and it just didn't happen, right? Again, advanced decline line in here, getting close, not in, but close to trend lower zone. And the cumulative build, I have to give credit where credit is due. I can't bend the data points and just say like, oh no, I'm just envisioning this massive bullish day, right? Tuesday actually had some steam behind it. Now, unfortunately for the bears, they never actually broke key support, but they actually had at the exchange level a decent amount of sell side pressure. And this leads into sort of a next data point here, which is, okay, what was the issue with Tuesday's session? Tuesday, of course, is the OpenAI/Oracle headline where, oh my goodness, the data center is not performing as we thought. The rental of these NVIDIA chips is not performing as we thought. That is a catalyst that has the opportunity to be sort of sentiment shifting for a market, right? That in it of itself, there we go, is enough to drive and start poking a little hole in the AI thesis. And yet, how did the market respond to this? The market responded negatively in the moment, absolutely. We're not going to take away from that. But what was the follow-up? The very next day, shrugged the whole thing off and went on to break for a new record high. So as I'm considering the market internals here, it's very hard for me, again, even with Tuesday's down day, to have a bearish stance noting how the follow-up took place. If we take a look at the market profile over here, again, value shifts lower on Tuesday. We have to give the bears credit where credit is due. Value shifted lower, liquidation break off the open. Now, what that typically means is this is just emotional. Liquidation break isn't new money sellers getting active. It's old money longs closing positions. So it's not like we broke, again, key support held, really nothing substantial in the internals that were like, oh my God, run, duck, and cover. But all things considered, value was lower. If the sellers were going to make a stand, if they were going to pressure that key support for downside, you would think that, again, this morning's open that drives into the value area. This is today's low of day right here. That's inside of prior day's value. The fact that we were unable, or I should say the sellers, I don't want to count myself as a seller. The fact that the sellers were unable to find acceptance back in that range where the market was saying, yeah, there's decent acceptance here. The fact that that didn't happen is pretty compelling. The fact that value today shifts immediately back to the upside, pretty compelling. Now, just like we said on this day here, thin structure can easily be retraced to the upside, and it was, but now thin structure can easily be retraced to the downside. And that is a threat that we should pay attention to. Now, what's interesting about this, and what we should sort of parse out, if you will, is if you take a look at the single prints of B period, let me make that a little bolder on the screen there. The single prints of B period here actually align with what? If you've been coming out to the pre-market prep shows, you know the exact level I'm about to say, 67.78. It's perfect. So if we were to break underneath value area low and hold for support at 67.78 at the single print closure, is that not the same exact spot where the hourly higher low could also be set? I'll give you a hint. Of course, the answer is yes. That's exactly where the hourly higher low can get set. If we go back over to the Spider's Cash, it's right here, right? It's the same level, 670.50. So if there is this reversal, again, you can take that short from point A to point B. That is okay. I'm not going to call you wrong for that. Look above and fail. Great. But would I overstay my welcome at point B? No. Would I fish for longs at point B? Yes. Would I fish for longs on a recovery back over point A? Yes. All right, so I think market profile and market internals both support this idea that stronger new money sellers just aren't getting active right now in this market. Let's go on over to the QQQ. Let's start on the daily time scale and see what we have over here. Of course, even more bullish on the NASDAQ. We can thank AMD for that. Just monster day, up 10%. Crazy. We'll talk about it. In terms of the chart, though, obviously a more definitive break to a new higher high in the trend count, brand new all-time high. So if you recall, the NASDAQ back here, the NASDAQ was lagging the S&P back in this segment. Now it's leading the S&P, and that's typically more bullish, right? Because there's 30, I think the latest figure is 34.x% of the S&P 500 is the XLK, aka the tech sector. So as we sit here on a new higher high, I think it becomes very obvious what I'm likely about to say, right? Either just straight up continuation over prior bar high, pullbacks that support over the Monday, Tuesday high here at the previous all-time high 609. If we come in like this, still probably seeking an hourly higher low and Brigade bolt back over 609, the time where I change my tone has to be here, has to be underneath 601.65. This is a soft higher low on the daily time scale. So if we were to break it, you're still in a daily uptrend. I would say that you want a daily higher low here at 596.75, near the daily 20, but it would likely be an overshoot depending on the time of week when and if that were to happen. Again, don't conjure up the bear image until it's actually appropriate to do so. Let's take a look at the hourly time scale. Much cleaner continuation here into the afternoon. Once again, very simple pathing ideas for the end of the week. Brigade bolt here, target upper edge of the weekly expected move. Pull back, fine. Higher low happening here. Moving in the upward direction, hourly Brigade bolt. Awesome. Pull back here, fine. Maybe try the short A to B. thin structure retracement, but at point B, you better bet your bottom dollar, lows, higher lows, possible hourly higher lows, 606.75. All right, where do I change my tone? This would be a little bit more detrimental, lower high underneath. This consolidation becomes a little bit more bearish. Pattern traders might suggest, okay, here's your head and shoulders, fine, whatever. Again, let's not conjure up the bearish image before we have to. This is where I change my tone more aggressively. Underneath 601.65, that is where the bears really step in and change the hourly trend in a much, much more meaningful way. I would start looking for that deeper daily pullback. Okay, so this is a possibility, but let's not front run the idea. I'm not just shorting the market up here because I think this is what's going to take place, right? Let's jump on into some Fibonacci's and some anchored view apps and just see what we get from that point of view. Coming in from the last major daily high or low over here up to the new high. Look at that, 38.2, right on the money. Can't make it any better. So right at that 601.65, 602.65 spot. We could come in here technically. Let's try a couple of fibs on the NASDAQ. Why not? Again, can't make it up. 61.8, that's the line in the sand fib, always right at the level. Perfect. How about from just today's session? Anything good? Anything beautiful? I mean, you'd think I was scripting this video or something, but the fib 38.2, right on the spot, 609. Perfect. Let's jump into the, I know the algorithm of the market, right? We all know who thinks that. Let's get into this QQQ anchored view app set. As in, if this creeps up, great confluence. I'd say that this cluster is still really reinforcing that 601.65, all set from that view. Let's come into our NASDAQ market internals. What do we see over here? Way stronger volume inflows, strong new money buyers, no substantial outflows on Tuesday, near trend higher zone, in trend lower zone, and then just opposing cumulative builds on the tick. I would say, again, leaning back into the higher time frame trends. Remember also in the Saturday video, we talked about weekly uptrend, we talked about monthly uptrend, daily trend, as we just covered, is up, hourly trend remains up. It's very, very hard to take a bearish stance here in this market currently, and I think all of the evidence we've walked through thus far really supports that take. If we jump into the NQ market profile, just to get a glimpse of what's happening over here, thin, drawn-out profile, not P-shaped, so it's not as much short squeeze, although A period's pretty thin. What would we say here? There's a little bit of a spike happening into the close, so M period spike rules will be in play for tomorrow morning. If you don't know what spike rules are, come out to the show and we'll talk all about it at 8 o'clock tomorrow morning. Value area is a little bit more central in today's session, so as we're thinking about the opportunity for pullback and setting that higher low, I would really pay attention to that on the NQ. Now, I've got a trick up my sleeve, right? Just do this. Look left. Where's value area high? Again, can't make this stuff up, right at your prior 2-day high. So if you pull back into those prior highs, if you pull back into that value area high, I would think that's a great first look for a potential higher low. 265 is the NQ number. Let's get back on over to the platform here. Let's finish up the broad market with our good friend, the IWM Rusty Russell. Let's just reset this actually and do it like that. Perfect. Remember in the Russell, we've really been trying to keep it simple recently. One of the things that I've been trying to keep top of mind is just the amount of effort into something that you may or may not even end up trading. I like knowing what the Russell's doing, but I'm not putting trades on in the IWM. I can guarantee you that. Just not really, it doesn't fit the personality of the types of moves I like. So in terms of keeping it simple, bullish box, neutral box, bearish box. It's exactly what we talked about on Saturday, right? I had some concerns on Tuesday's end of day close here, but today kind of wipes those concerns back away. We're back in the bullish box. If we Brigade bolt into blue sky territories, the trend remains up. We sort of avoid neutrality. And even if we do fall back down into neutrality, that's not overwhelmingly bearish for the S&P 500. It's exactly what we just said. It's neutral. I would be much more bearish if we were not holding this possible low here at the daily 20, 241.65, to actually yield some kind of lower high underneath the 20. Now you're talking about a trend reversal. And we just don't have that yet. Again, let's not conjure up these things that don't exist because, oh my God, we're afraid of them. We can prepare for those situations, but the base case is bullish consolidation, continuation. If we go here, we're neutral, and fine. If we slip the disc, right here on smalls, 241.65, fine. We'll change our tone to bearish, but we're just not there yet. And the evidence doesn't really support it. If we take a look at the hourly chart, another great example of walking through bar to bar. We did it in the S&P. Let's do it here in the IWM. Opening drive is down. Sellers, all they have to do to keep markets neutral and small caps is do something like this. Lower high under 245. Instead, what happens? I would argue it's the exact opposite. You reclaim the level, you set a higher low above, and you close strong near the highs of today's range. There's nothing bearish about that. So continuation, this, bullish until proven otherwise here on small caps. We can come in with the Fibonacci's, because why not? Let's be congruent. staying over the fib 38.2. And I think this works perfectly as well. Bullish above, neutral in the midpoint, bearish below. I mean, the fibs guide the way. It's all set. Let's come in here with the anchored VWAPs and see what else these can tell us. Let's come into this. The stack is right in the neutral territory. As long as we're above the stack, bulls on parade. All set there. Let's jump into the Russell market internals. What do we have out of the Rusty? You can see slight volume inflows. This looks a little bit more like the S&P, of course. Mild advanced decline line and kind of a flip-flop into the close out of the cumulative build. I would say that we're coming off of that Tuesday bearish action, once again, especially with the daily close under and in the neutral zone, the bears had an opportunity and today they failed. That's, I think, the takeaway for small caps. If buyers were really just not going to step up to the plate, you would have seen this lower high. You would have seen internals follow up on that bearish build, and it just didn't happen. So that's that. Let's take a look at the RTY futures. Any big discrepancies over here? Survey says, zooming out a little bit so we can see this, no. Value lower on Tuesday, value higher on today's session. Good excess in H period, good excess in A period. So no major concerns with profile. I'd say it's very simply an inside bar as well, so you don't want to overanalyze this. You're just inside the prior day's range. If you can break through the highs, break through the lows, that's where you have something more compelling out of the Russell. Let's get back on over to the platform. Let's take a look through our sector performance, which is going to be a pretty good experience here today because there's two really different views, basically, that you can take. So keep in mind the S&P notched a brand new all-time high. Have that as context as we're going through. So who was leading, who was losing, and where was the weight for the week? And then where was the weight for the day? Utilities lead the pack, and you might think, oh my goodness, that's a risk off. We've got up 153 basis points. Yeah, not great. You don't want utilities leading the charge, but notice that it's followed up by the tech sector, 74 basis points in the green. Bonds, a little bit more defensive. Industrials, 8%. Semiconductors still green on the week. Bottom of the barrel is real estate, and then we have discretionary and financials. So it's a bit of a mixed bag here when you take the weekly performance view, but if you take the open view from just today's Wednesday session as we broke to that new high, notice who leads the pack now. It's semiconductors, it's the technology sector, it's industrials, right? All of that is heavyweight and risk on, more so SMH and XLK, of course, but we can thank semis, really. So this looks like a decent push into new highs led by the correct sectors. It's not like semiconductors were underperforming and utilities led the market here. That was not the case at all. Utilities were actually down today by about 2 basis points. So really not the end of the world here in terms of sector posture. Now you're going to start seeing some alerts on the screen. That's just really where I care about learning something about these sectors. If the SMH breaks out of this little back-to-back 2-bar range, great. Bullish until proven otherwise. If we pull back, I would likely envision a deeper pullback to retest the hourly high or low at least in the QQQ. Right? So really just want to keep tabs on your 336.50 and 346.75, the new highs. XLK looks very similar to the QQQ, of course, but this is your base case. Looks pretty good for higher low attempts over 289.10. If we fall like this, I would still be bullish on the daily time scale, probably hourly neutralizing in there, and then bearish on a break underneath 282.75. But look at where we closed. Again, don't conjure up the image unless we have to. Industrials look good, trying to break out of this multi-month range. Let's see if it can continue. 8% of the S&P. Materials are extremely lightweight and just trading near the midpoint. No data point there. Real estate, lightweight, no data point here until we break 41 for a new swing low. XLF, we know that the concern has been this failure to break out here. I think the XLF financial sector is waiting for earnings, which will kick off next week from the big banks, JP Morgan, Morgan Stanley, Goldman Sachs, and the likes. So we'll watch out for that. I think you're probably sideways in the range until next week, until there's a catalyst, right? That's another thing to just say about the S&P as a whole. It feels like it's very slow intraday because there's been no BLS labor report that came out, basically. There's been no catalyst recently. The CPI is likely going to get pushed off. All this stuff's going to get pushed off. Market's waiting for that next shoe to drop. And when it all comes back, right, when the government reopens and, oh my God, all of this data comes like a tidal wave, that's when you're probably going to hit some volatility. So keep an open mind to that. Moving along to energy. No comment in the range here. Good for inflation, I suppose. That's the one comment. It's just going to put a damper on inflation. Staples don't really look great. Rolling back over to the bottom end of the range. Ideally, this would have been look below and fail. Target top end of the range. Bullish pressure for the S&P. But what's the caveat? I mean, the XLK just broke out to a brand new all-time high. So is this singular data point that we're looking at here enough to sink the ship in the S&P? Survey says no. Let's jump over to the TLT. No comment until we get some more data from the government in terms of the labor situation and inflation. This is where I have a little bit of an issue. The XLC ideally holds this, and the Monday hammer was looking pretty good, but the way that this chart has developed is slightly concerning. In theory, right, this breakout level should be where buyers step back up, offering some sort of support again. We're not really seeing that. Today's bar is evidence of that. So if we take out the Monday low, I would start to think about this as a little bit of downside pressure. This is one of those cracks that I was sort of mentioning in the intro. Not everything's all fine and dandy, roses and rainbows and butterflies, but this is kind of one of those things where you're like, all right, let's keep a close eye on that. Hence the alert here at 115.33. If we look at the XLY, it's very similar. This is like a line in the sand. Can't afford for anything lower underneath 234. This hammer needs to stick. Now, I do like the hammer structure because you have two back-to-back lows here, low and low. You look underneath, catch support at the level, and then close back inside of the bearish bar. It would start to indicate to me a failure to go lower from the sellers. So if we could pick this up over today's high for continuation to the upside, that would be helpful for the bull case in the S&P, keeping the rotation afloat. If we look at the XLV, really strong consolidation up here after this beautiful sort of extension on the drug pricing announcement, of course. And this honestly is very reminiscent. I don't know why I'm making the connection just now, but to AMD intraday on a 15-minute chart. Very funny connection made intraday, but check this out. Look at this chart here for a second, right? Nice upside move. Here's a little indecisive doji hammer-esque bar. It looks underneath the previous low, fails, closes back in the range. If you know your charts, and if you've been really watching these things intraday, check this out on AMD. Is that not a very similar setup right here? Advance, pull back. There's your little indecisive doji, and you could be like, dude, this is so simple. It's just a bull flag. I get it. But the point is, right, on the XLV, as we're thinking about healthcare, right? Let's just go back here for a second. The point is, if this is going to continue for another leg, what does that imply for the S&P 500? And again, we have to see it to believe it, just like we don't want to forecast, oh my God, the market's going to crash. We can't forecast, oh my God, the market's going to be at 7,000 ES. But so far, the pattern would suggest, and the hold here, the high and tight consolidation, is pretty bullish for healthcare, which is going to prevent an outright collapse in the S&P. Right? So that's looking good there. Let's go to utilities. This is D for defensive. It's kind of going parabolic here, and we know that all of this really has to do with this whole AI energy dependence and really energy delivery theme that's happening in the market right now. So XLU, pretty interesting, leading the charge. I don't know necessarily, with bonds underperforming, right, that I would necessarily lump this in with that D for defensive look, given the new circumstances. Now, you don't want to ever be the guy who says, oh, this time's different, and then it's not different. But that's just, it's one evolution, so to speak, of utilities. Is it related to the AI trade? I think so to some degree, but I would still maintain the classic stance of D for defensive until proven otherwise. Let's jump on into these ratio grids. And what this starts to show us is, again, some cracks in the armor here. Now, again, the glue that holds all of this together has to be the XLK. If this isn't an uptrend, if this is pointing firmly in the upward direction, very, very hard to be a short. XLF, though, cracks in the armor. XLC, cracks in the armor, failing that daily 50 this week. XLY, cracks in the armor, failing that daily 50 again. What's outperforming? Healthcare, defensive. Utilities, historically defensive. The one thing that keeps me open-minded to it not really being an all that defensive rally here is the XLP. And that's just because that to me makes a lot more sense as being a classic, clear-cut, no evolutions of defensive spend, right? Healthcare, it's just bullish for rotation if this is performing well, right? Utilities, AI trade. Staples, okay, hang on a second. Why is that? Like, what's the narrative behind that one? There really isn't one. So, although, yes, cracks in the armor, I would not call this full-blown risk off. And the reason for that is if we look at the A set, right, this is checking still a lot of the boxes. This can go, let's go neutral tilde there. Neutral, this is a check, making the equal high rather than a lower high. This is a check, and this is a check. So checking 5 out of the 6 boxes in the A set, that still looks bullish to me. If we go to the B set, we can see gold is on a tear, but I actually think there's a blow-off top trade to be had in gold, noting the volume. Kind of a crazy little situation. We'll see if it looks similar to this. Blow off top over here. It's not short gold looking for 200. It's short gold for like 15 minutes and see if you can capture a little bit of that capitulatory, oh my goodness, exit, you're long late to the party, I got to close this, right? That's the idea. So I'm watching gold low of day. I've been trailing this higher. I've been just sort of trying to wait for the right moment to do it, but could be around the corner. Nonetheless, on the ratio, this is still signaling a little bit defensive action. That's, again, one data point, very similar to the XLP chart. This is still bullish. And I would still say Bitcoin is bullish here near the all-time highs, even though the Sailor Shift tool has almost instantly flipped back to a red signal. So Bitcoin, I'm not willing to throw the towel in on it just yet. Let's go to a daily chart here. Ignore the ratio down below now. Why am I not willing to throw the towel in? I would like to see if this can break through the all-time high more meaningfully. Something a little bit more impressive, a little bit more concrete. If this can set a major higher low, I think it's worth continuing to have this as a risk-on asset rather than being defensive as a failed break, right? It was looking a little bit more concerning here. It's been a very sharp and prompt recovery higher. You could probably thank a little bit of the government shutdown for that. Let's jump into our dollar and rates. Not much commentary happening over here. All I'll say is that if the gold trade is going to fire off for a mean reversion, you probably want to see the dollar higher, right? Over 98.60, holding this breakout over this flat top. So we'll watch for that, but continuing along, let's get into we can go inverted ZT. We'll talk Fed for a second, although there's really not much. We have Powell speaking tomorrow morning. Let's jump into the calendar here. And wow, that's blinding. Very white and bright screen on my side. But wow, whew, the eyes. They burn 375, 400, 92.5% odds for that in the next meeting that is coming up sooner than you think on October 29th. We'll continue to watch out for that. I don't really think that there's a big takeaway here. The odds will shift meaningfully, I think, when and if there's a huge, tidal wave of economic data from the government. As of now, it's going to be a very quiet economic calendar, of course, because of the shutdown. You do have Powell speaking at 8:30 tomorrow morning. There is no Q&A. If you open this up, it's a pre-recorded video, so I'm not overly concerned about it. We'll be on the pre-market prep here together anyway, so we'll watch it, but I don't think it's going to be all that detrimental. I shouldn't even say detrimental, but the volatility component of the Q&A just isn't going to be there. Tentative on jobless claims, of course, and the only firm data will be the University of Michigan study on Friday morning at 10 o'clock. Outside of that, we're waiting on a government reopen. The earnings calendar, rather, is totally uninteresting, and we'll only watch this as we start getting into the following week for, of course, our good friends over in the financial sector. Let's get into some continued supporting evidence, starting with bonds. Again, probably not much to read into here with no data being released from the government in terms of labor and inflation, at least. Let's go to credit spreads. Small upticks, so small cracks in the armor. Once again, it's not a perfect market, but it's pretty, dare I say it, pretty damn good. Pretty damn good out there. Credit spreads getting a little loose here as they see an uptick. Keep that in your back pocket. You could also keep in your back pocket. This is the major one that I think is the biggest crack. Notice that the HYG junk bonds technically made a lower low today. Think about that, right? What does that tell you about risk appetite? Probably tells you, right, AMD could be a little bit of the froth here. That's just the only thing dragging markets higher. Semiconductors, right? So something to have in the back pocket. Once again, this is a handful of data points that might suggest bearish, but I think the overwhelming body of evidence leans still on the long side. I would not be a proponent for calling a top here. Let's get into breadth. Breadth really looks fine. Mild uptick on new highs versus lows. 50 SMA, 200 SMA chart is slightly lower. RSP is a beauty this session. Notice the hammer here off the top end of the range. Looks great. That's exactly what you want to see. It just means that the broadening nature of the market rally can continue so long as we hold a higher low. QQQE looks just about identical with a much cleaner, actually, higher low well above this previous resistance point. So breadth-wise, looks really good. If we look at volatility, this seems normal to me. You're just in this sort of trending zone where the market can go, volatility market can go sideways in here. You don't really have any huge red flag, oh my God, pay attention, right? And you can reinforce this with a couple of additional data points. VVIX has not even gotten off the floor, right? If this gets over 103 as a heads up precursor for vol, then fine, but we just haven't done that yet. Even on the pullback session from Tuesday, right, when we were testing that key support, not even at 103. If we look at the vol futures in strong contangos across the board, looking good here, looking good on the 9 versus 30 day. Look at this thing perking up today. And even the 1-day VIX is just in here. So, I don't think we want to be complacent. There's definitely, if we go back over to the VIX, and, please, I know that this is being referenced all over the place online, but you get a little bit of rounded bottom action here. I wouldn't apply classic technical analysis for finding bottoms or tops in the VIX. It's a mean reverting asset. You get that. But, is there some mild trend of small higher lows, meaning that there's some degree of skepticism or pricing in of volatility is going to increase? Maybe, but until that structure actually breaks in the S&P, I wouldn't look at this as an end-all be-all for that type of analysis. And you could even go out to the skew just to get a sense for what the out-of-the-money calls and puts are sort of looking like. And the black swan event's not really getting priced in. I mean, you're talking about a move that needs to be at least up here towards 160 plus. You're not there yet. So nobody's running for protection. Nobody's running for volatility. And you might spin the argument and say, well, hey, that's exactly when things get terrible, right? When nobody sees it coming, when nobody's pricing in the black swan event. And I get it. That could very well be the case. But guess what? The S&P 500 technical structure, the actual chart itself, the levels, the trend, that will tell me when and if this data point becomes actionably relevant. Let's get back on over to, we'll just reset this over here for tomorrow, and then we'll jump into our core list of companies. Then I've got 8 ideas to share with you today. It's quite a few. NVIDIA, this chart looks phenomenal. How could it not look phenomenal? I mean, it's the one stock to rule them all. I've got to admit, I was a little concerned with the Tuesday bar resting right here on the breakout level, but today's close back up towards the highs makes me think, is this just simple flag over the breakout point? I mean, that's the classic technical analyst in me saying yes. If we go to the hourly chart, right, this looks pretty good. It's actually been 2 for 2 on NVIDIA the last couple of days here. We'll see if we can make it 3 for 3 tomorrow. The big idea to watch is just this. Do we get blue sky territories over 189.50, 190.15? Blue skies above. Probably not interested in shorting NVIDIA if it starts to come into here. I would only be interested in NVIDIA short if it does this. That's a big failure on the daily underneath that 183.75. We're just not there yet, and the indications aren't there. Microsoft, I think it's interesting for a possible hourly double bottom. If you look at the daily chart, we broke out of this range, right? If you do something that looks like this, big breakout, here's a higher low pullback. Will it continue? That's the main idea. And I think the way to trade it is to look for this as your hourly double bottom over the neckline, probably targets this high. That's what I'm sort of watching for. Out of Microsoft, you could watch 525.25. It's been a little bit of a slower mover, recently. So I would just caution the expectation that it's going to be a no-brainer, easy, quick 5-minute trade with 300% return. Dial it back. Let's jump into Apple. There's nothing to say here on the daily chart until you break out into blue sky territories. Just be patient for 260.10. If you're above that, then maybe longs into new highs. But for now, I wouldn't touch it inside this range. Just let it balance. Let's go to Amazon. Great opportunity. Nice trade today on Amazon as well. Kind of wish I held a little bit more. It was tough. Broad market at all-time highs. Got to be a little cautious of that, but Amazon continued that breakout nonetheless. Look at this range. Really beautiful break of the range, tangled at the moving averages. The next steps are just any higher lows over, ideally 224.25. I'm thinking I'll give it the benefit of the doubt here as well at 222.50. So I'd be willing to let this go if we just go to the hourly chart now. Picture perfect. Yeah, don't get me wrong. This is beautiful. Hold this prior high. Hold this prior high. Awesome. Continuation. Great. If it does this, I'll probably look to re-enter here, right? If that's, or just initiate trades on it there, if that's the way it plays out. I'd be a little skeptical of this. That's a possibility. I wouldn't really short this lower high here. I would short this lower high here underneath 222.50, right? Into the bulk of this range from back there. Okay, so that is Amazon, and that would, in hindsight, that will look like, if it breaks down in that manner, it will look like a moving average rejection, which is fine, right? If that happens, fine, so be it. But for now, base case is higher here, and then like this, or pull back here, and then re-long on that. Let's jump into Google. Google's daily chart first. Kind of a failed breakout, in my opinion. 3-day high, broke out on Monday, failed right back down below. Really not interested in Google. Look at this chop and slop. Today's range, brutal. On ice, right? If it does this, maybe it wakes up, maybe it does something in the future, but really not interested right now. Let's go to Metaverse. And the first one in a very long time, had a little bit of a swing trade on Meta. Very rare that I'm net long options premium and holding a multi-day swing. So I do have to sort of, I suppose, or I should disclose that I do have a small runner here. I've got one contract left on Meta, looking to see if we can get some kind of pop over 720 tomorrow. It's a long call. If it goes, that's great, but just in terms of bias, if that starts to creep in, we did it in the morning session. I'll do it again. I'm going to try to be as unbiased as possible starting on the daily. Long lower wick, failing to go lower underneath these prior lows, failing to go lower underneath these 2 lows. That's Monday. Closes strong at the high of the session. Tuesday, opens on a very slight gap up, pulls back, looks underneath again, 708.25, these prior lows, and yet where does it close? Back inside of that, or above, I should say, those prior lows here. Today, same exact thing, closes at the high of day. Back-to-back lower wicks, buyers stepping up. On the hourly chart, this starts to look a little bit like that. Inverted head and shoulders. Speaking of, let's go there. Hourly trend, firmly down. Fully acknowledge that. Highs, lower highs. Now we have an equal high, and we had lows, lower lows, lower lows, lower lows. This is a higher low, undoubtedly. So again, trying to remain as unbiased as possible. If this meta can break over 720, the hourly trend will definitively flip to up. You've already got a break of the trend line. I'm not a fan of trend lines. I like the horizontal levels, so I'm watching 720. If we're over 720, I would be targeting this breakdown high at 728.10. That is sort of that's the outcome I'm looking for on this remaining contract runner. Okay, so we'll go from there, but that is sort of the way I'm seeing this chart in transparency, or to sort of like poke holes in my own thesis. What invalidates this? Well, if this is just going to be a double top, then I've got to stop out underneath today's low. Very simply put, 708.25. Can't afford for anything underneath that. Otherwise, the hourly trend is not flipping back to up, and the daily trend just remains down. So that's the way I'm viewing this chart. There you have it. Let's move along to Tesla. What's going on with Tesla on the daily? Then we'll get into that hourly. I hate it. I really hate it inside this balance range. This big 2-day engulfment has failed to go lower. I'm carrying that forward as a slightly more bullish data point, but there's really nothing to do in the midpoint of this range. You could see that Tesla, before some of those announcements on Tuesday, tried to get a footing here. I'm patient. I'm willing to be patient on Tesla. We know that this is not the name to get paper cuts on. It's the name to wait, be patient for, and look for the days that look like this, look for the days that look like this. Even this day back here was decent, right? It's a stock, to be patient for and wait for those more large, obvious breaks rather than trying to get caught up in the meat grinder and like, oh my God, I'm going to, with the volatility on the contracts. You guys know, if you've traded Tesla like meaningfully, right, you know what I'm talking about. So waiting patiently in the range, I'm going to let it be. Let's go to JP Morgan financial earnings next week. So far, this is a mild pullback, very, very mild. If you look on the daily chart, I would think of this zone as being supportive. Is this going to act as support near the daily 50? Will this curl back higher? That's the first thought, considering the strength of the trend behind us. We shall see. I don't really want to get overly convicted one way or another with earnings around the corner. Next up, Palantir. Another one that's similar to Tesla where I'm just like, in the range, I've seen better. So little inside bar today, not much of a comment there. If we look in the hourly chart, the range kind of sucked. If we're over 184, maybe targets here 189, but until that actually happens, pass. Really not interested in getting chopped up in the paper cut zone. Let's go to Broadcom. Great rally today. Unfortunately, just into chop and slop, but setting up a possible move, right? If this is it, if this is finally going to mark some sort of major double bottom reversal, failure to close this gap below from earnings, then fine, right? What's the trade? It's here, right? Thin structure retracement off to the left. So over something like 349.75, very interested in our possible Broadcom continuation for a move in the upward direction. Semiconductors it's like the SMH itself. If I just go back over here for a second, SMH, there we go. It looks like a meme stock. It really does. Does this not look like a meme stock? This is an ETF of some of the most important companies in the world trading like this. So it's an incredible time to be trading the market. That is, you feel like you can always say that, but it does feel like a special moment in time to be trading some of this stuff. Let's continue along. AMD, you want to talk about special? Look at this thing. I mean, just totally, I'm okay saying it because there's a gazillion trades every day. NVIDIA was great to us. Amazon was great to us. Totally missed this one. Again, that 15-minute chart look we had moments ago, that would have been the ideal entry. But my goodness, what a monster. I think it's just got to be very simple watches going forward. Brigade bolts out of range or holds over that 226.65 prior high from here. That's it. It's really all you can watch for. If it comes back down into range, I wouldn't short it until it's back in the gap, doing something that looks like this. And even then, the weekly pivot high becomes very important at 186.75. So next ideas, AMD pullback here. Great, looking for longs, something that looks like this. Let's rock and roll. If we get this, I would be neutral. I mean, you could try a short if you really want to step in front of the moving freight train, but you know what they say, do not tug on Superman's cape. Let's go on over to the Robinhood chart. Looks great, daily hammer, follow through to the upside. Awesome looking chart. Another one where we could just say, okay, what's the name of the game? Consolidation here, target all-time high. If we pull back, probably looking for an hourly higher low again, 145. You'd have to be reusing that level. Not my preference to go here. I would think if this pullback unfolds, it's in service to finding this trade in the future. All right, so not necessarily thinking about long here, but if it holds, this is what I would still be compelled about at some point down the line. Okay, where's the short on Robinhood? It's only here. That's the only thing I would want to short at this point. If this is going to go double top, huge reversal, again, don't conjure up bear images unless you have to. 138, thin structure, maybe, but until proven otherwise, bullish. Right here, Crypto, we'll see if it does anything interesting overnight. Bitcoin, Ethereum, typically Robinhood likes to move with those names. Let's get back to the theme of semiconductors, just because there's 3 big names that we should be watching. TSM, of course, has to be one. You can see I've got my alerts ready. Over this is a pie in the sky, inverted head and shoulders, all-time highs, 306.70. Very straightforward chart. Can we get the follow through? That's the question, right? Does this do this over a 3-day high? That's the watch. And it's not even like, look at the volume here. We're not even in blow off top territory where, oh my God, like on a relative basis, look at this volume relative to this, right? Then go back to something like gold. Let's go GLD, right? This starts to get like, okay, something's going on here, right? We're getting closer to the end. So that is one comment. And again, short-term end. I want to be very clear about that. I'm not looking for gold to collapse. I'm not a gold bear. I'm saying the capitulation trade is probably closer rather than further now that we're hitting $4,000 an ounce. All right, maybe it goes to the magic 5,000. You don't know, but I'm certainly keeping an eye on that setup. So TSM was your upside. Let's go MU. MU is another one where I would say the same exact concepts really apply. High and tight, inverted head and shoulders over this. Target the true all-time high, but really blue sky territories beyond that. 200, the round number, might also be a target. Ideally, it opens in range and goes intraday. It does not open on a gap up. If it does, you have to go gap fill reversal off of it. I would be a little bit more careful trying to chase a gap up here on a, say it gaps up to this. Maybe use that high here. So that's that. The only short, just like Robinhood, is if it wants to move into this structure, that would require let the double top play out and then see if we can get this little quick A to B into a, daily 20 is probably creeping higher by then, but you get the point. That's MU. Next up, ARM. ARM had a nasty little end of day move here. Look at this thing. Little consolidation range last 2 hours of the day, up and away. If you go to the daily chart, this is a daily breakout level. So the next big watch is if ARM can get continuation here over this high, you're really starting to talk about this at 177. I do want to double check that on the hourly. That's on me for not doing all of my homework. What is that pivot right there? Yeah, it's the right hourly. Believe it or not, that is the right hourly level to have. 167 and then here. Yes. All right. I mean, you saw it here first. 167.50. It's correct. So on the daily, right, a breakout of this balance, if this is going to go, talking about 177. Now, a caveat to keep in mind here is you've seen wall to wall. That's when you go from the bottom to the top, no major pullback. You could say this in here, but you really didn't hit the top of the range. This is like midpoint. This is consolidation. So I would keep an open mind to some pullback over 161 if we can get that interested. But generally just a decent looking chart in the semiconductor sphere of influence and probably worth, a look here if it goes or a look here if it's going to go as well. That's ARM. Those are your 3 additional semis. Next up, we have FUTU, not literally FU, but this is a longer term idea. Let's go out to a weekly chart here. What I want to point out on this is the weekly structure. Look at this prior resistance acting as support, little bull flag happening here. I'm not a big fan of trend lines. You guys know that. Let's come into let's go back to a daily. Let's go to an hourly as well. So what would the look be? I'd probably want to see it clear. Oops, let's get a click. There we go. I'd want to see it clear this high. Can we clear out up and over 183.85? That is the big watch. If it can do something like this, I'd start thinking about this high of the pivot around 197, let's say 15 for round number's sake. All right, so that is your FUTU trade is going to be something like that. All right, worth a watch, and I like that real high time frame structure from the weekly. Next up, NEE, Next Era Energy. You can see we've got the alert. We've got our little inside bar here. Probably worth trading this with shares and not options. If we can get Brigade Bolt out of this range over 84.15, looking at 86.30 coming from your daily time scale, looking way back to the left, even further back to the left. Let's go weekly. There you go. Oops, let's clear that up. Auto zoom. There you go. That prior pivot high, this prior pivot high, quick target, quick scalp, and then beyond that, it really opens up, of course, right? You can go way out, do something like this. Beyond that, it opens up to, we're talking 91, right? So Next Era Energy, probably worth an eyeball. That's in that sort of energy-related space, which is just, it's a hot theme right now. You can see it as evident in the chart. That is that. Let's go on over to, we could look at OKLO real quick. It wasn't technically a part of the 8 that I wanted to share with you. I don't find this daily bar all that impressive. I mean, the structure is fine. It's doing this in the upward direction, but you could see, I really want to see it through that all-time high if I'm going to start trading this long again. I want to see volume come in. I want to see this act like a momentum leader like it did back over here, right? So that is OKLO. Let's jump on into remainders for this pre-planned idea. App. App 11. Look at the daily inverted hammer rejecting the 20, failing to go higher over prior bar's high. If we come into the hourly chart, this had the SEC announcement, right? That's the catalyst there. If you drop 617.75, looking for this, A to B, little scalp to the downside. It tends to be very spready on options, so be careful if you are going to trade it. But it will be ETB, easy to borrow, now that it is over in the S&P 500. There's plenty of liquidity to go around. You can just short the shares if you're not interested in shorting via puts, right? So that's app. Next up, we have MSTR. Strategy, which is no longer micro. Look at the daily bar here. Really interested in this hammer off the bottom end of the range, especially noting that Bitcoin itself didn't actually fail and like fall off of a cliff. It has a higher low opportunity, right? So strategy trades like garbage. It's really not a great trader, but if we can get a Bitcoin move to happen intraday is the key. Intraday Bitcoin move, not overnight. If we can get intraday movement there, then this becomes really compelling. Maybe it's Jerome Powell at 8:30 that ignites it. We shall see. 335.70, daily hammer, bottom end of the range. Risk reward makes more sense towards the top end of the range rather than being a new money short into support here. Okay, that is strategy. Next up, last but not least, we've got Snowflake. Snowflake jumping into it, 249, and there you go, 272.18. Who let 18 slide? Probably me. That's my own fault. 272.15 as your upside target is going to be the next watch. Right, so a little bit of a breakout through this high. If you go on down to the hourly chart, decent consolidation here into the afternoon. You know, I think it could be better. I'll give it that. It could be better. It's not the best watch here, but if this can continue and do this over time, that would become a little bit more compelling. Right, something out of this range looks not bad. Let's just go out so you can see. I want you to be able to see a little bit of the structure off to the left, right? So we're sort of clearing this, and we're sort of clearing this as we're getting this breakout. Right, so that's the compelling reason why. There's really not much structure in here until you're coming into 272.15, excuse me. And this is just firmly based on the premise of, remember the volatility here. I mean, that breakdown of 2022 was epic, right? Look at the daily bars. This is like one daily bar's range is $18. This daily bar range is $18. Go to what we're dealing with right now. The daily bar range over here, we're talking about 13, 6, is a little bit more common. This is 9, 7, right? So it was more than double what we had back then. All these bars are much more small as well. So, you know, that thin structure retracement, this is really what sort of wakes that up as a possibility. Anyways, that's Snowflake, and that's what I've got for you in today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comment section or by giving the video a very simple thumbs up. Remember, we will be live tomorrow morning at 8 o'clock Eastern Time, as we are every single day, for another installation of the pre-market prep. We hope to see you there. It's always a good time. Remember, Powell's speaking at 8:30. With that, I will leave you be for the afternoon. If you're interested in trading live with myself and other great traders, you can check out the links listed down below in the description. You know where to find us in the live squawk. Have an awesome afternoon. Have a green trading week. And as always, I will see you in the next one.